Okay, all right, guys, welcome. So small group today, no worries. If you guys are new or not, I'm not sure, but essentially what we've been covering is really just reading price. So what I want to do with this workshop is recap a lot of the big concepts, such as I'm just gonna write them down here as we take. I'm gonna take notes as essentially we cover these. Whoa, okay, that's huge. So one of the concepts, probably the biggest one we covered, is market structure. That's literally giving structure to price. So this is the chart, this is price. And for these workshops, I'm really focused on right up here, euro dollar. We're trading currencies, but these same concepts, they apply to stocks as well. So when we look at market structure, I'm gonna move that over here, that right there. Okay, yeah. So when we look at market structure, there's a few things to look at. It's literally what price is doing. So is price going up? Is it going down, or is it going sideways? If it's going up, the uptrend, like all this right here, this is an uptrend. And in between that, there was this bit of consolidation, right? So if price is going up, we're looking for higher highs and higher lows. Well, let me fix that. So pretty basic. It's simple to read. The hard part is when we put it all together, all these other concepts as well. So if price is going down in a downtrend, we're going to be looking for the exact opposite. And I'm going to take each of these and just show it to you one at a time. So price is going down, lower highs, and lower lows. Mark that there. I'm going to fix this. So that's market structure. That gives us an idea of, okay, for example, this right here, and this is the daily chart. So each one of these candles is showing you a day, right? So right down here, price it came down, made a low, it came up and made a high, but then it made a low. And you see how this low broke below this previous low? It technically, in the last workshop, we covered price breaking and rejecting zones. So in this case, this candle closed below, and it does count as a break, but it failed to essentially make a new structure low. See how the wicks right here, imagine this candle being another down candle, big black candle. It was all the way down here. It looked like it was going to fall further, right? But it closed above. There was no confirmation. So in that case, what are we going to call confirmation? I'm going to write that down. Confirmation is essentially, the way I view it, because trading, one thing we talked about is it's an art and a science. Some things, and when I say art, some things are basically open to interpretation. How you see it might not be how someone else sees it. And some things are just a science that they just hold true over time. It's back tested, it's forward tested. So when it comes to confirmation, one thing I like to look for is new structure legs, right? A new structure leg. So a new structure leg is essentially a new higher low or a new higher high. And I'm going to draw that so you guys can get an idea, because it's good to look at essentially a basic view of what price can do, because once you look at real price, what it's doing variations of the basics. But if you understand the basics, you'll have a good idea of when you to expect certain variations. And this is what I mean, essentially. If price is making these right here, these are new structure legs. If price is in an uptrend, right, price will make a high, and this is your new structure high, but then it'll make a new low. And in the process of making this new low and in this new high, this is what I would call a new structure leg. Right here. Wait. All right. This would be like your new leg. And the reason I call it a leg is because it's kind of supporting the uptrend, right? In this case, price broke down, right? It broke down, but on the lower time frames. So this is the daily. And one thing to keep in mind for this class is we're looking at a lot of time frames, not just focusing on one. And that can get a little overwhelming, looking at multiple variances of a trend within a trend within a trend. So that's this concept of fractals or multiple time frame analysis. So what I mean by fractal is, think of essentially a trend within a trend. So within this candle, you're going to see a bunch of more zigzags. So, but before we cover that, let's just go back to new structure leg. This is the thing about trading. There's a lot of things to essentially understand, and when you look at it one at a time, it's a little confusing. It's very confusing. I remember the first time looking at charts, I was overwhelmed. I was like, dude, this is a lot. I don't even know what price is just moving up and down. But once you put it all together and you keep looking at price, it makes sense. And that's kind of my goal with these workshops, because trading's not easy, guys. It's not. It's simple. Doesn't mean it's easy. So yes, back to this little tangent there. This is our new structure leg, right? Price makes a high, higher low, and a high. So what happens is, say this is your daily time frame, right? Like daily time frame up here. In the lower time frames, there's going to be more sporadic movements. And what I mean by that is, I'll just do this. This is quicker. So you're going to see more zigzags within zigzags. And these lower time frames make up the higher time frames, because price is fractal. It repeats in it within itself, right? So that can be an example that this blue line is your daily making a higher low, kind of like something like this. Or maybe even like one of these, high, higher low, high. But then the lower time frames, they show more detail as to why that structure leg is being formed. So this structure leg, this formation, something happens here that gives us a confirmation, this new structure leg. Something here happens, and there's variances of what happens there that can tell us, okay, price is probably going to continue up. And we'll cover a lot of these variances are essentially setups. So setups, I'm gonna write that down here. Essentially, the market sets up. It tells you what it's doing. And that's the whole idea of trading. As a trader, we're not investing for the long term. I mean, you can trade for the long term. That certainly is a possibility. But for example, for what I do, I'm looking to trade short term, waiting for price to tell me what it's doing. So this is actually a good example. I want to cover this area. So if we were to trade the downside break, and keep in mind, pretend you didn't see any of this, right? To see what happens here, this candle closed below, right? That could tell us a lot of information. But something has to happen in the lower time frames for that candle to keep going down. And we're gonna take that apart. So this is where also trading becomes an art and a science. Do you draw your zones like this, like a line? Do you use a shaded box? For me personally, it depends on what I'm looking at. But if I'm looking for breaks, sometimes this might be not enough confirmation, whereas, this might be your entire zone. But in this case, say we want it to be, we'll use as little confirmation as possible. Say like, okay, this is our zone, price came down. See how this candle made a wick, closed above. This candle closed above. This candle came down, made a wick, came up. These are box plots. It's price showing you each daily candle. And in this candle, price came down just a little bit, right? A little wick right there. Zoom in on that. So actually I like that better. Price came up, and then it rejected this area. So history repeats, right? You can't predict the future, but history repeats. See how over here it rejected? It rejected. So here, once price comes down here, two things are going to happen. It's either going to break and continue. Actually, it can break and continue. It could fake out, or it can just reject. So it rejected, but it wasn't a clean rejection. It actually came down and closed. So we're going to highlight this candle and essentially see why that happened. Because then when we go on simulator, you'll see enough scenarios that I don't want to like overwhelm you guys by showing you trades on the simulator without understanding the whole process, because there's a lot that goes on to it essentially. So we're going to look at this whole area, right? So this is June, January, February, March, April. January, February, March, April. April, there we go. April 23rd. So these 2 days, what happened? Daily chart. So back to the fractal and multi-time frame analysis, we're going to zoom in essentially. So see how this was kind of like the daily? Now we're going to go to the 4 hour. There we go. So kind of pretend, see this is the 4 hour chart now. It's showing you the same thing as the daily, but more detailed, because you're seeing price develop quicker. You see, the smaller time frame, the more price develops. Each of these candles is now 4 hours. So what happened here? So we want to look for confirmation of a new structure leg, right? Going back to the analysis I showed you guys. Whoa. If we're looking for a new structure leg, we're looking for price to break below, come up, and this is retracement. So when price makes a structure leg like that, let me fix this. I don't like that one. Redo it. Okay. Oh, what happened there? Okay. So these new structure legs, you can call them a few things. It's open for interpretation. It can either just be a lower high. It could just be retracement. Price is retracing. It's covering back what it already covered. So price came down here and made a range. A range is the space in between your zones, right? So this is your range. This area right here. Price came down, left a range to cover. What I mean by that is price came down, made a lower low. Then price retraced. As it retraced, it at some point rejects this area and continues. And that happens all the time. So you see how price it came down here and came up. Whoa. Oh, what's happening here? Price came up, made a high, higher low, high, higher low, high. It actually failed to respect this area, came down, made a lower high, lower low, lower high. And you see it price zigzags, it repeats. It happens over and over again. But what happens is there's different variations. So that's essentially the language of price, market structure, the biggest key. So then what happens? We make it the lower high and then price closes it down. This is the basic, but understanding this, what happened here? Price closed down, right? So we were expecting price to reject off this level and make a lower high right here. But instead, price actually made a lower high up here. So this level in the daily chart wasn't necessarily respected, right? But instead, price came up to the most recent zone. So this is actually more technical. We'll cover this in the simulators, because one thing to look at is when price breaks a zone, how far can it retrace? Is it going to retrace to the respected zone, a recent zone? These are variations, right? But we're not going to worry about that right now, because this wasn't our setup. Price did not essentially trade what we wanted to. But say we want more detail, right? Price came down, made a lower low, a lower high, and it made a lower low. So say this is our confirmation. We want to, price broke our zone, right? You didn't see any of that? And say you want to trade the downside. Well, before we trade the downside on this new structure leg, we have to understand what gives us confirmation. So, like I said before, something happens that gives us confirmation. when price breaks below, whoa, okay, there we go. Something happens right here that gives us confirmation. Okay, I'm not having a good time with this little tool. Come on. Dude, that's not working. All right, whatever, there we go. Something happens here that gives us the confirmation. So if we want to see what happens at these lower highs, we need more detail. Looking at it right now, the most you can get out of it is that price just closed below a zone, right? This was a zone. See how it kind of rejects here, rejects here. This is essentially like, this whole area is a zone. But see how it closed below here, respected it. Price rejects, respects. Price made all these wicks and just kept closing below. And you know, overall, price is going down because we're making, we failed to make a new high. We failed to make a new high. Usually what doesn't happen can tell you what to expect. So if we made a new high, we would want to see price going up. But instead, it broke down. And now we have these ranges. These ranges will fill and then they will break in downtrends. But here's the key. Price closed below, right? But something happens in these areas. So we need more details. We need to figure out essentially why. And what I like about this is if you look at all the time frames, monthly, weekly, daily, you can really see what price is doing at each zone. And the more views you have, and by more views is the more views of different time frames, you can get a really good idea of what's happening. It takes experience. You have to train your eyes to see the candles, right? So new structural legs, retracements, lower highs, they're all the same thing essentially. New lower high, new lower high, new structural leg. Now we're going to go to the 1 hour and see why these prices rejected this area. Zoom out. Where'd it go? There we go. So now this is the 1 hour chart. See how it kind of looks like the daily, but with a lot more detail? Whoa, where'd we go? Okay. So yeah, it looks like the daily and the 4 hour, but with just more detail. So you can zoom in and really see what price is doing. So this is the first lower high on the 4 hour. Oh, that's a 30-minute, my bad. Okay. 1 hour. So going back to it, this is the 4 hour. We're going to look at this one first, this lower high, and see what happened. And what you want to try and visualize is, you want to visualize price doing waves, right? You want to see price doing, oh, why is it not? Okay, there we go. You want to see price doing these waves over and over again. That's all price does. Price just does these waves, and that looks horrible. Whew. Okay, whatever. I'm going to trace it here. I made a low, lower high, lower low, came up, failed to make a new high, came down, and sometimes they're really choppy. But that's essentially how you want to see price. What can get confusing looking at price is the wicks, literally the wicks, because if you just take price and you put it on a line chart like this bar, no, like this. Where's the, oh, I don't have, okay, here we go, here it is. It's easier to see what price is doing. This visualizes the highs and the lows better, right? Gonna go back to example. You want to look at price like this. The only thing is that the candlesticks, they give you more details as to what's happening. How is price opening and closing at certain times? Whereas with the line chart, you don't have the advantage of time. You just see price as it's developing. So in this case, you have your high. I'm actually gonna mark that. In this case, you have your high, right? Then you have your high or low. Hey, what's up? Hi. Okay. High or low, right? Off a major zone in the past. So sometimes zones can get a little iffy. So we like to have details by going to the higher time frames. And that's how you can see where zones are, right? See, this zone rejected because of this zone over here. If not, it would have just broken straight through, right? Oh, I don't like the way it looks. Okay. Going back to it. Line chart. Where's my, okay, I'm gonna use this text instead. Wait, let me test this. Why does it stay on the chart? Okay, I don't want those. So I'm going to go back to the line chart and essentially see why price breaks down, right? It's actually better on the 4 hour. Let's do it on the 4 hour. Because when you, so we're gonna essentially cover this whole scenario using market structure and the new structure legs. But before we get down into details why, you need to see the bigger picture. Understanding the bigger picture is probably the biggest thing to overlook in trading. So this is our high, right? Why is it not staying the way I want it to? High, blue. Okay, that's what I was looking for. I was looking for the one that, see how this text stays on the screen no matter how I drag? I was looking for the one that stays with like the chart itself. So here we have our high. We then have our higher low. And it's easy to skip over some details when doing this. So I like to draw it actually when looking at charts. Because if you just look at it and count it out, you might miss something. Whereas like I'm a visual person, so I'll look at price, right? Price will make a higher high. And then it'll make another high low. And this is the trend, right? One thing we covered in the last workshop is that you can visualize the trend using trend lines. Simple enough. Instead of drawing them like that, you can just draw a trend line and kind of see the bigger picture. But what's happening here? Whoa, delete that. Not taking a buy limit. So price is actually, it looks like it's going, the bigger picture is that price is going down. This could have been a lower high on the big picture for a new lower low, right? So seeing how this was a high and price broke down, came up. See this area here? There's a high here, there's a low here. There's a lot of traffic, right? See how this is a clear range? What I mean by clear range is like there's no traffic here. See how this is like clear, no traffic. Here there's a lot of traffic. By traffic I mean there's a lot of structures that are in the way. Here there's a lot of structures. Here this is really clean price, simple uptrend. Here there's all this traffic, right? So it looks a little confusing, so we're gonna add some detail to it with the candlesticks. So what we can see here is that there's actually some kind of, there's a zone here, right? We have a zone here. We have a zone here, because here we have a low, right? Price came up, came down. We wanted it to respect this zone, because usually zones reject, but they also break as well. But here price broke, and it actually did the same thing over here. Instead of retesting the most recent zone, it actually pulled up a little, and this is a really weird structure, not gonna lie. Same thing over here. We wanted to see it respect the zone for a clear downtrend, but it just failed to do that. At the same time, it failed to make the upside. So knowing that, see how this is a zone right here? We even have this as a zone. As price is trending, why is it not clicking? Okay. This could even be a zone up here as well, right? So as price is trending into these areas, we're gonna see a lot of traffic. See how price came here and didn't really do anything. It just stayed. This is called consolidation. When you don't have any new higher highs or new higher lows, you have consolidation. I'm gonna write that up here. Oh, hopefully it fits. Okay. Consolidation. No new structures. And this actually looks really messy. I'm gonna clean that up. Okay. Market structure. So right now we're looking at higher highs and higher lows. But here's the thing, those higher highs and higher lows, they will either continue or they will break, right? So higher high, higher low. Higher high, we wanted to see a higher low, right? Because we want to think of these trend lines. When you look at these trend lines, think of them as a zone, right? And this is probably one of my favorite things to look at, because when you look at a trend line, whoa, and then prices coming up and making these higher highs and higher lows, think of that as the same thing as these normal zones, but just rotated. It's literally the same thing, right? If you just rotate it, they're the same thing from different angles, essentially. It's a one interesting way that I like to look at it. So it'll either, at this point, I'm gonna clear that. So at this point, we have a new higher high, new higher low. So this is the 4-hour chart, right? This is a zone here that it could reject off of. At the same time, this is a zone up here where price essentially came up, came down, made a higher low. Then it went into consolidation. You see how there's no new structures? This is a whole area of, essentially it's dead price movement. Price broke down, broke up, made a new higher low. But see, this is the bigger trend, right? The higher highs, higher lows. This is like the smaller trend. At some point, it came all the way back down again. But looking at it, this is a big candle, right? And this candle broke through. So once it broke, okay, it broke the trend line, but we still have this higher low, right? So there's still technically an uptrend that could happen. But if it breaks through and then makes a new lower high, then the trend is broken. And that's exactly what happened here. When it comes to confirmation, the structure legs will tell you what is happening, because so once this happens, right, after you watch all this price develop, it breaks. It's going to break either to the upside or to the downside, right? Or it'll just keep going. But in this case, it broke. So, and say you're just watching it break, you want to wait for confirmation, it'll make a low. Then it'll make a lower high. And this lower high would be the confirmation, right? Same thing as over here. Price made a low, lower high, low, but then price broke this high, right? And the reason it broke this high is because you want to zoom out and say that price has to develop a certain way. See how this is the daily? Now back to the 4-hour, right? 4-hour. You really just want to look at it. Then daily. Price, and now we're just going to delete all this and just literally look at it for what it is. Price came up, made a higher high right there. Then it made a higher low, then a higher high, and then this big daily candle closed, breaking that low. So I like to use the higher time frames as stronger confirmation than the lower time frames. So for confirmation, you could use the higher time frames, really, because the way the higher time frames candle close, they dictate direction. Higher time frames always dictate direction. So you have now your confirmation of the daily candle closing, and this could have been like a high, a low. This could be like a lower high, but then look at it. It closed below and it broke. This is what we wanted to see happen down here. And we're going to get to this point down here, because this is an interesting scenario. So you have your low right here. Price broke. When you go in the 4-hour, you look at it and you look at the details. It doesn't line up that clearly with the daily, right? That's the thing about these time frames, is there's a lot of variances. So, well, okay, recording good. So what I like to do is I like to adjust the zones. So on the daily, this is the daily zone, but it makes more sense than the 4-hour. But then on the daily, you get a stronger confirmation because this was your lower high, right? Whereas if you're only zoomed in, you're not looking at the bigger picture, you might say that, oh, it's rejecting the zone. But the bigger picture is it's not rejecting that zone because the daily broke below. See how there's a little discrepancy there? Daily time frames, the higher the time frame has a stronger confirmation. So that's a daily, and that's the 4 hour. So then this is a valid lower high. And we would use this zone instead because it lines up with the daily. So knowing that, this was just a fake out. And this fake out, and what I mean by fake out is price broke down, but it didn't retest. It just broke down. This is a fake out, came up, then broke up and retested. So fake outs, to visualize them, you want to look at them as essentially a structural leg, but in the wrong direction. So when we're looking for structural legs, we're looking for this, right? Price broke, price made a retest, made a lower high, higher low, new structural leg, retracement. However you look at it, price made a new leg, and it continued. Whereas a fake out would be price breaking, and then price breaking back down, and then retesting. So this would be the fake out, because you want price to essentially come up, right? But that doesn't happen. It could also happen the other way. Price breaks down, and it retests. But in this case, price broke down, broke up, but sometimes it won't retest, but most of the time it will. And you'll have that new, and this was essentially like, think of it like a false structure leg, but a lot of times it just retraces a more recent zone. So one thing to take into account is which zones do you use. That's subjective. According to that's where trading becomes an art, and we'll cover that. But for this case, we're just going to use the daily zone because it's a higher time frame. And higher time frames are confirmation. So then looking here, right? What happened here? This lower high. If you want to kind of take an even bigger picture, this whole thing is a zone on the daily. Like it really is. Price came up, made a high. Let's pull up the line chart. Price made a high, higher low, high, higher low. Price made a high, and then price broke down. And essentially this was, it's not clear, but this would be your lower high. It kind of makes more sense, right? Let's essentially draw it out. And I love drawing these out because you can really see that price just broke down. Essentially did this. It did that whole setup. So you want to visualize that happening. So this is the daily time frame. And keep in mind, these setups, this took 1, 2, 3, 4, 5 days. It depends on if you're a swing trader, scalper, what time frame you're looking at. But you can even do this on like the 5-minute and the 1-hour chart. It all works the same way. So this is our zone, right? Price broke down. A few days go by. Let's see the confirmation. 4-hour chart, right? Now what we can do is we can kind of give this more detail. We can leave it as is and say that, okay, price will either break above or it'll reject and keep going down, right? Oh, let me delete that one. But I like to kind of refine the zones. I like to give it more clear meaning. That to me makes a lot of sense because it's one clear zone and it's respected, it rejects, it breaks. So now keep looking forward, price is essentially what happens now is once price fills the range, it makes a lower high and a lower low. Once price does this thing where it fills the range, what happens next? You have your lower high. I'm going to mark it off like that. Okay. Okay, use the same color, my bad. But yeah, you have your lower high and then your lower low. Once price fills the range, what happens next? Well, you need to wait for more structure, either to the upside or, let me redo that, or either to the upside, come on, just need a mouse, man, or to the downside, right? you don't want to trade in the middle of consolidation. It's like, it's not probable, because what happens is at these zones, price will either reject or break. In the middle, you can just get sloshed up and down, right? It's risky. You want to trade at the extremes, essentially. So what happens in my opinion, if price looks like this, you want to wait for it to break. But if you want to trade the structure, say you want to trade the structure, right? Okay, this is your zone. You're giving it more detail because now you're in the 4-hour chart, so you can see more clearly what price is doing. So price is actually, and what's cool about this is, so right here, that's 12 GMT, that's 8 a.m. market open. So at 8 a.m. price is at a zone. When price is at a zone at market open, that's a strong probability it's going to reject, right? Because market open, price usually sets up for the trend. That's something more technical. We'll cover that in future workshops for the simulator. But like I said, price making a lower high, right? These lower highs. So we're going to go to the 1 hour. So seeing the big picture, right? The market structure, confirmation, new structure legs. Let's see what happens here. Price comes up, right? And actually overnight, we had this choppy little, and this is the 1 hour chart. So we went from the daily to the 4 hour to the 1 hour. Now we have much more detail, right? So you zoom out, do you see how this is kind of like the daily chart, but with more detail? You're able to see what price is doing at a specific time. And that's your biggest advantage. When it comes to reading charts, your advantage is being able to differentiate price across time, really. So this is consolidation right here. No new structure. I'm actually gonna move that out. Yeah, no new structures, right? Price made a high, made a low, a high, but then what happened? Price broke. And you could say price broke this high, right? But there's no confirmation, there's no new structure leg to show a higher low. And if we're looking at the big picture, say we want to take buys. If you want to place a trade, you want to see price actually break all of these, because you have all this traffic, right? If price breaks this zone, you have traffic here, you have traffic here, you have these zones, you have more zones that reject. So, and actually, the safest way to take a buy is that you would take it up here, if it happens, right, in the future. Because this is like your major daily zone, right? When you zoom out, this is your daily zone. But now this is the 1 hour, so there's more detail. Because what could happen is here, price will break up and it'll fake out. You see that? That's actually kind of what happened here. Price broke up and then it faked out. But then knowing that, there's more detail to this as well. Price is in the 1 hour chart going into a zone. But how does this form, right? You want to visualize this. If this is the bigger picture and price comes up to a zone, something happens here. And that's the thing I kept hinting at. So you kind of like build, you want to visualize what's happening here, right? Well, if we want to visualize that, think fractals, multi-time frame analysis, trends within trends. You want to see price essentially, kind of zigzag down. Come on, catch. There we go. Price would be zigzagging down. Actually, I don't like that color. It's not clear. We'll do green. There we go. Price will just be zigzagging down. And then at some point, price will fail. Oh, I messed up there. Okay, but at some point, if price is retracing, this is the retracement. At some point, it's going to fail to make a new high. And this is what we want to see. We want to see price fail to make a new high right here. And just to complete the picture, we're going to do that. This is what we want to see on the lower time frames right here, right? Because price repeats within itself, right? So 1 hour chart, our focus is this area. And we're going to highlight it like that. So doing that, we're gonna go now to the 15-minute, maybe even the 5-minute, whatever looks clearest. So yeah, the one thing annoying is when you zoom in, it like takes you to random spots sometimes, but yeah. So now looking at the 15-minute, each candle now is worth 15 minutes. So you have all this detail going on. And looking at it, price, I'm actually gonna draw this just to make it simple. So now you can really zoom in and really hone in on what price is doing. So remember, on the 1 hour chart, price came up and is making a lower high. Same thing on the 4 hour, just so you don't forget. We're looking at this whole area. We're gonna highlight this whole candle. Price came up, closed below zone. Next candle, why did price drop? You can easily say that price dropped because we closed below a zone. Price dropped because we closed below a zone, right? Simple. It happens here, happens here, happens here. Even here, price kept closing above this area as a zone. But say we want to know why did price close below the zone? You want more detail, right? Just keep zooming in, 15-minute. And now when you look at it, I like to visualize it and say, okay, this is kind of like consolidation, no clear structures here, right? It's not clear unless you want to like get all, I don't like to get in, there's a point where less is more, right? Less clutter. You don't want to draw all these trend lines and count all these structures because you'll count lower high, lower low, lower high. Like you'll eventually just get lost. But bigger picture is price right now is pushing up, right? This whole thing is pushing up overall. So knowing that, can you see this trend line? And this is where it's essentially, okay, what trend line works? See how this is a low, price makes a high, higher low, higher high, kind of. Let's zoom in. But then it comes all the way down, and it doesn't really respect this high. That happens a lot in these lower time frames. Price makes a higher low, higher high, and keep in mind, market open, 8 a.m. is around right here. Okay, so 12 is 8 a.m. based on my broker. If you guys get into brokerages, it's a little more confusing with the time frames and all time zones. But yeah, from this broker that I'm using, the trader's domain, 12 GMT right there, that's 8 a.m. So what do we see? Overnight London session, price is essentially retracing, right? It's essentially fueling up for the real trend. Price is making higher highs, higher lows. So we're gonna draw that. Just so you guys can get an idea. Higher high, higher low. I'm not gonna count this one, I'm just gonna count this one. This one, it technically, it is a higher high, but it's not a strong one. You know, it didn't just come up like this one. Higher low. So here, near market open, we reach a zone. That happens a lot. Price will tend to look for a zone by market open. It just happens a lot. Then what happens? We make a higher low. So what we want to see is we want to see price make a higher high and fill this range. We have this range to fill, right? This would be like our textbook setup. Price would come, make a high, higher low, and it fills the range. It fills the range. But in this case, price didn't fill the range. It actually closed below, right? And it closed down, then it closed down, and then actually it broke this low right here. But it's not the same thing. This keeps happening. It's not a clean break. But then price closes up, and it looks like this could be a buy, a higher low. But keep in mind, from the bigger picture, we're not looking for buys because we're closing below our zone. And you can't forget that. You might see these higher highs and higher lows, but if there's a zone, there's traffic. There's a high probability of rejecting, and it just happens. Good example is all these lows rejecting. Price just rejects, closes above. Another example, price rejecting. Same thing here, price is just rejecting. So we're not looking, we want to see those higher lows break. And that's the biggest thing of market structure is at some point there's a break in structure, right? And what is that? That's subjective. Some people will see maybe the actual break of the trend line is your break of structure. Sometimes you can get a little risky going the 5 minute and the 1 minute. I do not advise that. I mean, even though I like to do it, it's just you'll get wrapped around because there's a lot of fake outs. Like seeing these wicks, the more wicks, the more erratic the movements. So looking at it, price failed to make a new high. It actually closed below. So seeing this right here, after this lower high, after this is a good confirmation. This is the new structure leg, lower low. And these structure legs up here, you didn't know. Like if you look at price developing, you wouldn't know that's a lower high until after. But once it happens, you know that the probability that it comes up and fakes out is not probable. What's probable is it continuing the trend. So like the 4 hour closed below, and going back and forth through time frames, it is confusing, I'm not gonna lie. It takes a bit to train your eye to see it, but once you see it, it just gets easier and easier. So 15 minute, price is closing below on the 1 hour, on the 4 hour. 15 minute price is coming up, but then it breaks. Whoa, okay, yeah, there we go. So you have a trend line, then you have price. And then what happens? It breaks. And then the downtrend. Trading this, simple, wait for a break. Once it closes below the trend line, it's high probability. What's high risk is trading above here because it could fake out. Because once these lows break, it's a new trend. And the trend will trend until it ends, essentially. So that is the big picture of how this lower high formed, this whole area. And just to show you guys, just take a look at it. We're going to zoom out. Zoom out. So see, that's the higher high, higher lows, break a structure, and then it comes down. So then going to the 4 hour, that's all the detail in this candle closing below. That's why candle closed below, because the lower time frame uptrend broke. So something similar should happen down here. So seeing left, looking left, we see that there's a zone here. So we want to see something similar happen here, because this is now a new lower high. And now we're actually going to delete this. Actually, no, we're going to leave it there. Actually, no, we're going to delete that daily zone, make it clear. We want less clutter. So looking at this now, right? We see price rejected here, but it also rejected here. And then it eventually broke. And these are big wicks, like that's a lot of movement, wow. So price came down and then it started making a lower high. And see how in this case, this kind of happened again. The way price retraced was to a more recent untested zone. This happens a lot, and we'll cover that in the simulator because these are really specific examples that you kind of have to like look at all the time frames to see why. So when you go on the 1 hour, so this is the 4 hour, price broke down, came up, retraced, retest, higher low. So this whole area is your retracement. This whole area is your lower high. Essentially, we want to see the same thing as over here. What happened? So price came up and then it closed below. And then the next candle, the next 4 hours, and actually let's see, this is, so yeah, this is also market open, 12 GMT, that's 8 a.m. market open. So the stocks open at 9:30 a.m. The currency market opens with the USA market at 8 a.m. So it's about an hour and a half earlier. So 8 a.m. market did the same thing, literally. I wonder what the next 8 a.m. did. So yeah, 8 a.m. kind of rejected again. It just happens, but yeah, focus here. Lower high, lower low. Why did this happen? Let's go to the 1 hour. And we can see that there's a lot of choppiness. What I mean by choppiness is that it's not the most simple looking structure, right? because we also do have that daily zone. That's one thing we want to keep into account. Strong daily zone here. So maybe this might not even be a good trading week. You know, people think that because you can trade all time frames, you can trade the 1 hour, you can trade every day. And that's a whole big thing that's marketed. But realistically in trading, you might not really be trading every single day, even if you trade lower time frames. You might not be trading every single week, and that's just the reality. Market has to set up. It has to set up the way you want it to. So daily zone, wow, it's not clean, but okay, anyways. If we want to add detail, we could say that less is more. So we're going to focus more on the recent. We have a zone up here. And we'll wrap up with this example. But yeah, price came up and made a lower high and came all the way down. Made a lower low. Came up. And so you see how this is a big wick, this candle? This 1 hour candle came all the way up here. And it looked like it broke, right? So say you see price coming up, you're like, oh, damn it, I want to take buys, I missed them. You never FOMO, you never fear missing out, because say you think you're missing the up move, you have to remember you're waiting for confirmation, new structure leg. Price did not make a new structure leg to the upside. In fact, we're wanting to see a structure leg to the downside. See how this is all consolidation? See how like there's no, come on, that keeps happening. Okay. Essentially, price is moving in a box, a sideways box, no clear structures. I mean, you could say it broke that high, but there's traffic to the left. Price then broke to the downside, started zigzagging, making lower highs and lower lows. And on the big picture, this is what the 4 hour is starting to look like on the 4 hour. So knowing that, see how price came up? We want to wait to see it close. Is it going to break it to continue up? Is it going to break it to fake out? I'm actually going to draw that. So for confirmation, this would be something you'd want to see for buys. Once it starts forming like that, the lower time frames might start zigzagging up, and it could be a buy. But say you don't see that. Say price breaks up, and it starts zigzagging, making those lower highs and lower lows, but then it breaks back down. That would be your fake out. Something like that'd be a fake out. But in this case, price just came up and closed below. Came up and closed below. So then there's a lot of activity going on here. Something happened. It did retrace this untested zone, and that's something that happens a lot. Price will always retest zones, always. It will always break, and it always retest. It happens on all time frames. So 15-minute. And it does get annoying looking at all these time frames zooming, but it's the best way to essentially read what price is doing. So the 15-minute, it did close above, right? But keep in mind, we're looking at a 4 hour zone. Watching a 15-minute candle break a 4 hour zone is not really strong confirmation. Just looking at it, the 4 hour zone has 4 hours of price confirming a certain area. It's either moving up, it's moving down, it's breaking. 15-minute is so fast, it's volatile. And when people say volatile, they essentially just mean that it swings more. See that? This is less volatile. This is like strong swings. So looking at the 15-minute, we could even just go down to the 5-minute because it makes sense in this case. All right, where is that? Can we go that far back? There we go. 5-minute. So looking at the 5-minute, price did not really have a clear uptrend, right? You don't have any clear upside trend lines. Say you'd use a trend line, you'd probably miss the whole move, right? So trend lines are something we're going to cover because sometimes it's better to use the steeper ones. Other times it's better to use the flatter ones. But in this case, we wake up, 8 a.m. Oh, 8 a.m.'s over here. Okay, so we're just going to focus on the lower high. So price comes up, right? So you might draw your trend lines to see which one works, which one doesn't. You could literally draw a ton of them. So this one works the best, and it's the safest, but then look at all this move. So what happened up here? This whole movement. Price made a high, higher low, high, but then you see how it never really filled the range? It never did our essentially our classic setup. There we go, okay. We have our high, higher low, but instead of filling the range, we didn't fill the range and we actually broke down. We want to see price fill the range, and if it doesn't, what doesn't happen could be a Q. See how in the first example, a trend line broke. Up here, a trend line broke. In this case, we're looking for the low to break. So how do we judge that? Do we look for a trend line or low? It all depends on just essentially seeing it, but in this case, there's no real nice trend line up here. If you draw this is way too steep. It's risky. Usually the steeper the trend line, it's more risky to use. It'll break more often than not. So how could you trade this? Either close below, once you wait for the 1 hour chart to close, once you wait for the 4 hour chart to close, that's a good enough confirmation, really. So we're gonna mark that. I'm gonna delete that, and we're gonna mark the candle. Say you wait for the candle. Come on, click. Come on, man. There we go. Okay. This is gonna be our last example before we wrap it up. But say you're waiting for price to reject. This candle comes up, and then it closes. What happens next? So that was a 4 hour chart, right? So these candles are 4 hours apart. So I'm just gonna mark that. So this is the first candle that went all the way up, and then it closed. The 1 hour, more often than not, is good confirmation. It's a good standard. So you don't have to wait always for the 4 hour candle. And again, we're gonna cover that in simulator because it's more technical. You have to kind of see it play out. So if we want a strong confirmation, you wait for the 4 hour candle, which the new one begins here. And I know it gets annoying. You're looking at price across different time frames. So it's kind of nice having a big screen sometimes, but you only need one monitor. Nothing like that generic stuff you see where like you go on Instagram, you go on YouTube, see all these big monitors, 10 screens. It's unnecessary, really. But it looks cool though. So this candle closed down. That's the new 4 hour candle right here. Just gonna go back again. New 4 hour candle. And it's actually kind of far from the zone, right? That's why using the 1 hour is pretty nice. Good confirmation. So we're gonna mark down what happened at the new 1 hour and the new 4 hour candle. So zoom in right there. Price closed below. That's already good enough. That's a good enough confirmation. Price closing and rejecting it. But then if we look at the 15-minute or the 5-minute, we get even more detail, right? So this is the new 4 hour candle down here. The new 4 hour candle broke the trend line. That's a beautiful confirmation. And then once your new lower high forms, you can just ride the trend. So we're gonna cover more of that in the simulator upcoming with entries, exits, stop losses, managing trades, because overall trading, it's not about winning or losing, it's a process. The process is what you'll essentially give you the outcomes, because you can win a trade, you can lose a trade. It's irrelevant because long term, you could win more than you lose more than you win. It all depends on risk to reward. We're gonna cover that coming up, but I'm trying to get you guys to see what price is doing across all time frames. Because on the simulator, it's go time. You're looking at all of it, price. We're speeding it up to see what price is doing, and it's overwhelming. But you just gotta take it slow. Look at one time frame. Is price closing? Is price rejecting? What's market structure doing? Higher highs, higher lows. If it's consolidating, don't do anything. Just wait for a break. Unless you want to play ping pong trading up and down, but I don't recommend that. So confirmation, is it breaking? Is there a new structural leg? You can even draw trend lines. And fractals, look at the big picture. That's the biggest thing, looking at the big picture, right? Because you can stay in one time frame, and if you keep staying on one time frame, how are you going to forecast the future? How can you do that without seeing what the future is getting ready for? That's what the bigger time frames are. And that's the biggest thing in predictive analysis. So with that workshop, we've just covered price making a lower low and lower high. See, all of this took essentially 2 weeks, I think. So good setups, they can take time. They take time to play out, but that's what we covered. New lower high. In this case, the trend line broke. New lower high. In this case, a structure broke. Then the trend line broke on the lower time frames. So that's it for this workshop, guys. I know it is a lot looking at all these patterns within patterns. It gets easier, right? So yeah, guys, that's it for this workshop. Yo, thanks for attending. We're gonna record this one, and yeah, next week, same time, simulator systems coming soon, guys. So there we go. Stop sharing. Whoa. No, go back to that. Oh, and don't forget your GB points. Definitely don't forget your GB points, guys. Oh, dude, there's a chat. My bad. My bad. Oh my God, I did not see the chat. Woo! I might need more monitors. Okay, so doesn't US session open 5 p.m. Eastern? So yeah, holy shit. Okay, I feel bad. Yo, so 5 p.m. Eastern is when the weekly market opens. That's when the new weekly candle forms, right? 5 p.m. Sunday. But the thing is, market open happens every single day. Every 8 a.m., Monday to Friday, there's market open. Think of it as stocks. So stocks price trades Monday to Friday, right? Sunday, I don't know if stocks trade Sundays. I'm only doing currencies. Currency market opens Sunday and closes Friday at 5 p.m., essentially the same time. That's when the market's open. The market's not open on Saturday or Sunday. It's just not. So, I mean, it opens Sunday afternoon, yeah, 5 p.m. But then what happens is after Sunday, so I'm gonna actually go through an example real quick. Yo, I'm so sorry. I would have answered this like a long time ago. Okay, I'll have the chat open for next time. But so in this example, that's Sunday. No, this is all right. 2020 422. 420. Okay. 422. Yeah, let me just cover this in. So 422, so that is Wednesday, all right? So let's go to Sunday the 19th. Sunday the 19th. 17, 18. This blue light filter is kind of weird, man. Okay. 2012, okay. 4/17, 16, April. Did I get that right? Did I feel like I messed up? January, February, March, April. I swear to God, January, February, March, April. 4/22. Okay, 19. Dude, I can't even count. Okay, right here. My bad. All right, so this is the 17th. Friday. Right here. Okay, my bad. I'm just going to do. All right, so this is market open. Right? Market open on Monday. On Sunday. And it's kind of weird, but come on. All right, I don't like this mouse. Okay. Sunday is right. And I just know this because I do the time change a lot. All right, right here. So these two candles. And the thing about currencies, it all depends on your broker. But if you get into trading, I can help you guys with that. It's no big deal. This is Friday, 4 p.m., 5 p.m., one of the two. Friday. 4/17, 20 would be like, yeah, 4 p.m., I think. Market then opens 5 p.m. on Sunday. You see how it skips from the 4/17 to 4/19? It skips Saturday and Sunday when the markets are closed. Then Sunday it opens at 5 p.m. So then, did I skip a day? Oh, so then this is Monday right here. No? Oh no, this is London session. London session is at 3 a.m. No, wait, 4. Dude. 7 right here. Okay, 3 a.m. 12. Okay, we're just gonna write this down. Dude, that's so hard. Okay. 7 is 3 a.m. for this broker. 12 is 8 a.m. That's standard. 7, 8, 9, 10, 11, 12. 3, 4, 5, 6, 7, 8. So then 4 is 12 a.m. So yeah, market open. Dude, I'm sorry, that's a long answer. Market opens 5 p.m. And the reason I say this whole thing is because there's lots of market opens throughout the week. So market opens every Monday or every Monday, Tuesday, Wednesday, Thursday at 8 a.m. for New York. London is 3 a.m. Australian session is 5 p.m. Asian section is 6 p.m. or no 8 p.m. Then you have Tokyo. You have all these market opens, and they happen every single day. But the biggest ones are just London and New York, in my opinion. Okay, yeah, dude, that was a long answer, but it's because there's multiple market opens. So, oh, what's up, Garrett? Didn't even see that. Guys, check out Garrett's workshops. That dude knows his stuff. He actually he'll help me a lot, dude. Like, thank you. But what I prefer currencies to stocks, biggest thing is leverage. You can essentially, so like, I don't have it on this account, but I turned a $20 account into like $170 just trading 5% risk. It's easier to like start small, especially if you're new. Also like it just because you can literally trade the 5-minute time frame. I mean, you can trade stocks the same way, right? But I like currencies because it's kind of the first thing I got into, and I stuck with it. I never really got into stocks, but looking at currencies now, it's just that the structure, there's a lot of structure to it. There's a lot of time frames. Same thing with stocks, but just looking at stocks and looking at currencies versus looking at crypto, after seeing all these like fractal structures, definitely crypto is the most manipulated. In crypto, you'll see the most big wicks. Stocks, you'll see a lot of consolidation, but then when it trends, like when you those stages, like you say, like it's clean. But I don't know. I just like looking at currencies, man. It's my thing. I do want to get into stocks though, because stages, man. Stocks are more fickle in terms of price and valuation. Oh yeah, so also one thing about stocks is I don't like about it is that there's a lot of fundamentals and stuff, like learning companies and earnings. The biggest fundamental for currencies is, and the reason why I trade currencies is because essentially interest rates guide currencies. So if you look at the euro dollar, if the euro has a stronger rate, it's going to go up than the dollar. If the euro's interest rate drops less than that of the dollar, and you can, this gets more into like interest rate parity and all that, but the biggest fundamental you have to worry about is interest rates long term. And it's really simple to keep track of. The only hard thing is that long term would be like the monthly and the weekly. And within those, come on, let me choose. And within those, like there's a lot of choppy movement. So again, back to why I prefer currencies is because currencies are more volatile. They move more. There's more structure happening more often, I guess. Like look at this, man. These past few weeks have been crazy on the euro dollar. So like a small position here, I actually took I took buys here. That was crazy. But it just moves more, man. Also kind of funner. But yeah. I don't know much about fractal shares, guys. That's like stocks. Like I feel like currencies are really simple. You can look at options, which is like that's scary, confusing. You can look at futures markets. They're pretty cool. There's also futures for currencies as well. But this is to me. I keep it simple. I look for higher highs, higher lows. I look for breaks. I look for trend lines and repeat, refine, and learn. So yeah, guys. Sorry I answered the questions late. Too many whales. Yeah, dude, too many whales, man. Big banks are the whales. They got big pockets and they choose. Yeah, crypto's done, man. Crypto's supposed to be like decentralized. Now like banks own it. So yeah, dude. Whales, man. So yeah, guys, that's it for this workshop. Yo, thanks for attending. So sorry about the questions, guys, but yeah. That's it, guys. Have a great day. Pause this recording. Yeah, of course, dude. Oh, and yeah, so I answered your question in Slack. Definitely same links as always.